everybody. Boy, nice here today. I'm in Arizona. I think it's going to hit about 81, 82. I don't know. It's going to be kind of warm. Oh, it's already yeah, it's already 70, plus degrees here. It's going to be nice. You know what though? At this time of the year, we hope it's not nice. We hope it pours rain and is very cold because we have like basically the largest sporting event in the world taking place this week here in Scottsdale. The Phoenix Open is coming this week. Over 1 million people attend in like a 5 day window. Crazy, absolutely crazy. The entire city is booked. Can't drive anywhere. Horrible, I tell you. Horrible. 2 degrees Fahrenheit in Minneapolis. I hear it's nice in 2 degrees Fahrenheit. I'm thinking about going for a swim in the pool later. How about you? That's not very nice, is it? Not very nice. All right. Hmm. So welcome everybody. I have a great presentation actually today. So if you guys attended in the last couple of weeks, I completely changed today's presentation. Completely changed it. And I'm actually rather excited about it. So let's, you guys ready? Everybody want to get started? Okay. It is the greatest show on grass. I'm not going this year. I'm finally getting a little old for that crap. But I like it. I like it. Um, Good. Looks like we have everybody kind of tuned in right now. I like to make sure everybody's good to go. So, well, without further ado, let's get started. Again, my name is Don Kaufman, and you are watching Fast Track Trading, the secret to rapid gains. All right, risk disclosure. We're not a financial advisor nor a broker dealer. Yeah, I'm going to cut to the chase, get to you real quick. One of the reasons I throw this up here, I spent a long time in the brokerage side of the business, spent a long time in the market making side of the business as well. That's exactly what I'm going to be talking to you about today. So I stress to you, if you think you've seen this, you haven't seen anything. I completely changed the presentation over the last few days in here. Copyright disclaimer. Mine. It's all mine. Look, need to get a hold of me after today, just go to support at TheoTrade.com. The reason I put this slide up here is just want you guys to know I'm accessible. We're all accessible here at TheoTrade. So when I say we, TheoTrade is not a one-trick pony. It's not just Don Kaufman. Yes, I am one of the co-founders of TheoTrade. Nevertheless, we have Jeff Bierman, Blake Young, Brandon Chapman, John DePoche, Tony Rago, Corey Rosenblum, and go on. We've actually Todd Sweet. So we've got quite the depth chart here at TheoTrade. I want you to know that we are all accessible, meaning you can email us anytime. Just put my name in the subject, go right to me. So fantastic, because that's important to me that you know that you can reach out. You have trade related questions, hit me with it. Let's get into it. Housekeeping, a few housekeeping items. Look, what I'm going to explain today, I'm going to go deep. Is everybody okay with that? You guys okay if I actually go down the rabbit hole a little bit? Because there's an area of my trading that I discuss to some extent. I don't discuss in many of the events though that we do, and I'm actually going to rip into that today. So we're going to go. You're going to feel like Alice tumbling down the rabbit hole by the time we're done today, and I hope that that's okay with you. I'm going to give you an excerpt of one of the what I would say is the preeminent areas, okay, in trade. And that's my intention today. Is the way if you understood everything, before coming here, it wouldn't be worth your time. So I'm going to make sure, okay, that you're going to learn something today. And that's why I'm telling you, okay, you took the time to be here. This is important. Focus. Close Facebook, turn off the phone. In fact, okay, I'm usually the one that's the biggest violator of that. So I'm on silent mode. I got everything else closed out. By the way, I got monitors all over the place over here. Kick out the kids, kick out the grandkids. The dog can stay. Let's roll. Look, stay with me right until the end of the presentation. Our gift to you, we're going to give you our auto expected move indicator. Some of you have it, some of you don't. It's a $500 indicator. Okay. It is literally an indicator that has changed the way that we view markets. Now, I talked a lot recently about the expected move indicator. Today, I'm going to give you insight above and beyond even this. Okay. I think you guys are really, again, going to appreciate kind of what I have in store for you today, which I'm going to get to you momentarily. All right. So here's a little bit about me. I always joke around. I'm like, everybody has a story, like how they got into trading. We were talking earlier today about like, have you guys ever heard of Darvis Box? Okay, Darvis Box. The guy was like a professional ballet dancer before he became a trader. They were a school teacher and then they were a trader. He was a taxi cab driver. He was a trader. Listen, that's not how I got involved in this. I actually grew up around trade. Um, I had family that traded in Chicago, and it always kind of interested me. I had no intentions of like, no aspirations in like high school or college of like, I want to go to the trading floor. That was never my intention. I happened to kind of fall backwards into it 3 weeks out of college. I ended up in Chicago. Okay. I was clerking, which is, basically taking abuse from traders. And 3 weeks after I was in Chicago, I was trading. And it just so happened I was right place, right time. Somebody didn't show up on time. And when they did show up, they showed up heavily intoxicated. They were fired, and they handed me a jacket. It's like being a backup to the backup, and all of a sudden, okay, a couple of people get hurt in front of you, and trading in Chicago is about rising to the opportunity, and I did. So while on the trading floor in Chicago, I met a gentleman by the name of Tom Sosnoff. Tom's a bit older than me, but we actually hit it off. We, very close, stay very, very close. Tom's the founder of Thinkorswim. So he invited me. I was the ripe old age of 24 years old. He invited me to what was a startup called Thinkorswim. So people always ask, like, how did you guys get involved like Thinkorswim? I just knew some guys from the floor. They literally, while I'm walking off, trading floor, they were like, "Hey, you're young, okay? We know you a little bit here. Trust you. Come, we're starting up this thing. It's called Thinkorswim." I'm like, that's the dumbest name I've ever heard, but let's do it. Dumbest thing, because I had heard from the traders that I worked with, get off the floor, learn everything you can, get off the floor, and that's what I did because you knew the trading floor was going away. I started trading in the late '90s. So at Thinkorswim, I was on the executive team. We took the company public in 2007. I was there when TD Ameritrade bought us in 2009. I signed a 5-year lockup clause with TD Ameritrade. It was a nice exit. I exited in 2015. We built TheoTrade in 2016, and that's where I've been ever since. And what you're going to learn today comes from a tremendous amount of experience, not only in the market making side of the business, but the brokerage business. But what you're literally going to learn today, okay, order flow. And literally, you're going to learn the retail side of the business versus the market making side of the business and why it's so important. Okay. So the area of expertise I have is I got to see your order flow for the better part of 15 years. Everything ever went through the Thinkorswim pipes, TD Ameritrade pipes, the most robust order flow in the entire world went through, okay, Thinkorswim and TD Ameritrade's pipes, meaning we got to see every trade you did and we studied them. And a lot of what you're actually going to learn today comes from that background. Um, some CNBC hits from time to time. Let's get down to business. Let's do it. Let's do it. Movement of markets. Okay. So, before I even jump on here, by the way, I want you guys to know. So I do use Thinkorswim. Okay. I also use some Tasty, and I'll jump to an account over here. But when you look at markets here, just go to a chart, you look at markets. Why do they move the way they move? Okay. Why do markets move the way they move? Movement markets. Okay. Because what we're going to start to talk about today and what we're going to bridge our way into is, I really feel like the longer that I've been in this business, when people come to TheoTrade, okay, and I want you guys to know this because I'm emphatic about it, but when people come to TheoTrade, and they come from all walks of life and they come from all different levels of experience. Now I get somebody that's never traded a stock that comes into TheoTrade. I get people that have actually made markets that come to TheoTrade. I've actually got a hedge fund manager. It's a client of TheoTrade from all walks of life and all different skill levels. Okay. And this conversation that I'm going to have today, in my opinion, is like the great, okay, equalizer. Um, because very few people really understand the depth of like why do markets move the way they do. Let's by the way, these are not rhetorical questions. Why are markets moving? Okay, why do markets move? Anybody? What are you going to tell me? Like if I said why is the market moving, what are you going to tell me? Come on, just throw in anything you want in the chat. Let's make sure everybody's alive. Let's make sure you're awake. These are not rhetorical questions. Okay, it's good. Supply and demand, buyers and sellers. Okay, I like it. I mean, we're getting somewhere. And this is exactly like I want to, you know, evoke a response from everybody. Um, there's a lot more than just the idea of buyers and sellers and supply and demand. Okay. And that is precisely what we're going to bridge our way into here today. I want to take you into an area that is going to make you better at understanding why markets move, okay, and how to get ahead of some of those movements. You know, people spend inordinate amounts, and I was talking about this a few weeks ago, if you guys tuned into that one as well, but people spend an inordinate amount of time looking at price action on charts. They look at a MACD and a Fibonacci and a Bollinger Band. Okay, like I can pull up all kinds of different studies in here, and we'll pull up Apple and it rips to the upside, and I put up an RSI Laguerre, and it's like overbought, but like the fractal energy is kind of middle of the road. And then we look at something like Nvidia, which is getting pummeled lately, and look, it's an oversold territory, and the fractal energy has run out. You realize that no matter what study that I bring up, well, no matter what study I bring up, okay, you're driving 100 miles an hour, looking in your rear view mirror. Okay, tell me I'm wrong. Tell me I'm wrong. Okay, think about that for a second. Because every study that you use, whether it's NVIDIA with an RSI, whether it's a MACD, whether it's a Fibonacci, all you're seeing on a chart is price. Okay, and maybe some volume and maybe some time. Okay. And if you look at this, and I was just talking about this earlier today, but if you look at like Thinkorswim charts, okay, first of all, who built Thinkorswim charts? You go Thinkorswim. I got a better one for you. Okay. 3/4 of the studies that are in Thinkorswim charts were built by our very own Jeff Bierman, who resides right here at TheoTrade. Okay. Because how do you think all these things got built? Somebody had to actually build little algorithms for it. It's Jeff Bierman. This thing reported directly through my group. The entire charting package reported directly through my group. Okay. I'm intimately familiar. When I left in 2015, there was over 430 different studies on here. You know what they're all based on? Pretty much price, time, volume. Crazy, right? Okay. And it's again, I'm not going where you guys think I'm going. Like everybody's like, you're going to talk about expected move. Oh no, I'm not. Okay. Some of you are like, I have no idea what that is. It's good. Okay. I'm going a whole different route today. Whole different route. I want to get, okay, to why markets move the way they move. Because we tune in constantly to financial media. You got CNBC, okay? You got Jim Cramer screaming at you, throwing things around his studio. Okay. Come on, people. How many people have ever watched Jim Cramer? Admitting it is the first step. Okay. I'm not ripping on him. Okay. Come on, people. How many people here have ever watched Jim Cramer? Look at this. It's like dead silence. Come on. This is like, Confessions of a Trader. We're gonna have a little bit of Confessions of a Trader today. We're gonna make this fun. Okay. Let's get crazy. Nope. I like it. Okay. By the way, I don't watch TV. That wasn't the response I was looking for, but that was awesome. Okay. Um, I love to tell this story, but when I was at Thinkorswim, we built a show on CNBC. Okay. The show was called Options Action. And I spent a long time in Jersey in the studios with Tom Sosnoff and JJ Kinahan and literally like built the show. And the producer of the show, okay, was the same producer as Jim Cramer. And I've met her many a times. and she had an Emmy in her office. So I said to her, I said, "Oh, Emmy, this is it's unbelievable. What'd you get this for?" Okay, she looks at me dead straight in the eyes and goes, "I got that for what? Jerry Springer." Okay, makes a lot of sense then when you watch his show. So the woman that was actually the producer and the creator of Jim Cramer's show is the same producer and creator of none other than Jerry Springer, the late great Jerry Springer. You have to appreciate that because you'll understand like the throwing of stuff and the yelling. Okay, what I'm getting at over here is everything you guys are tuned into media wise is buy this, buy this, buy this, buy this, but they never get to the root cause of what actually moves the market, and that's where we're actually headed today, the root cause of what actually moves markets. And people are so unfamiliar with this. Okay. Look, if you can understand what I'm about to cover today, okay, you're going to be 10 times better off in this business, okay, than other people. I mean, plain and simple. You don't have to be a genius over here. You just have to understand conceptually what I'm going through. In markets we trust. Look, the cart's leading the horse now. Options, okay, the options marketplace literally dictates what the stock market is going to do. The options marketplace is a literal cart leading the horse. Now, some of you probably can say, "Oh, I knew he was going to go there." Yeah, okay, but we're going to go a lot deeper. So, options, okay, are traded now in such a significant fashion, okay, that they are literally moving stock. How about this? Okay, how about if I could show you that? Plain sight. I'm actually going to show you what drives markets to move, how they move. Okay. You think that's going to be worthwhile, worth your time? Because again, what I'm doing today is giving you a fairly deep look down the rabbit hole, okay, of what really the driver of that market is. And it's not just saying, okay, the options marketplace is dictating what the stock market is going to do. That's easy. I'm actually going to show you in context today of how option flow, okay, moves markets. First of all, money talks. Every dollar that's being traded, it's skin in the game, right? So when people were, I was asking earlier, I'm like, oh yeah, what moves markets for like supply and demand, buying and selling, okay? Regardless, whatever your answer happened to be, okay, the real answer is, okay, people are voting with dollar bills, just chucking down money right there. Okay, billions of dollars are traded every single day in the options market, and the options are setting the line on future price action. Now, we're going to explain this again in some context, but we have to understand that in the options marketplace, okay, in the options marketplace, okay, it's literally driving stock. As I said, I'm going to show you exactly how this is done. We're going to start with some very rudimentary skills, okay, and we're going to kind of work our way up a little bit today. I do hope you enjoy it, okay. Go with the flow. That is the order flow. So you're trading, okay. You're sitting at home and you're moving markets. Okay. Option trading causes stock market movement. Options trading is going to cause the entire stock market to move, right? And this is where we're going to go. Now, everybody has this assumption, okay? Everybody has this assumption. It's somebody big that's moving the marketplace, okay? There's the truth to that. Let's get into it. Let's get all, okay, of the demons out. So we're going to talk a little bit about this term order flow. First of all, when we talk about like order flow, like, oh, what's that? What's order flow in here? Okay. Well, again, as I said, I'm going to discuss that in quite some detail over here by looking specifically at the marketplace. We start talking about order flow. All right, we're going to go bring up Microsoft for a second. Okay. Microsoft, you can see stock. Okay. And I'll own this stock with the volume in there. Okay. About 10 million shares have traded of Microsoft today. It's a $400 stock. So if you think about this, you could probably do some quick math. Just bear with me. You could do some quick math here, and you could say at the $400 stock that's traded like 10 million shares. So how much value is that? Okay. Anybody? How much value is that? You can put a lot of zeros in there. It's fine. You're talking like, tens of billions of dollars are flying through there. Does that make sense to everybody? What I'm saying is like, put a dollar sign to it. Okay. It's cool to kind of do that because it's a $400 product and it's 10 million shares and we're only, like halfway into the trading day, like literally halfway into the trading day over here. And you're like, don't worry about it, man. Like a couple billion, what's a few billion, 40, 50 billion amongst friends. Okay. Right. So, all right, you have a pretty good feel for that. Okay. And you're like, excuse me, it's a lot of money. That's nothing. That's nothing. Because now I'm going to show you something even more interesting. Go to the SPX for a second. The SPX, the mother of all products. This is a $6,000 product. Doesn't matter whether it's a stock. It's not a stock. There is no stock. You can't buy or sell it. There's no volume. Want to see something crazy though? Okay. Go look at how many options have traded on here. Okay. Now Microsoft, you're like, Microsoft is big boy. Microsoft had 10 million shares trading on it. This little monkey over here, this little monkey is called the SPX, and it has almost 2 million contracts. Just round it, doesn't matter. It has almost 2 million contracts that have traded it at. But that's 2 million contracts. Contract, okay, or what? Every one contract equals 100 shares, right? Every one contract equals 100 shares. So all of a sudden you're like, that's the equivalency of 200 million, like shares. And it's a $6,000 product. And you're like, holy crap. Do you see where I'm kind of going with this? Do you have any idea how much money is moving through the SPX right now? Okay. You can figure out what they term notional value. What notional value means, it means dollars and cents. How much money is really moving through this bad boy? They want to know the truth? On any given day, it's trillions of dollars are moving through this. Okay. On any given day, it's trillions, okay, with a T. And you go, well, how do you know that? Because the SPX, okay, is traded against the ES. And the ES, every one of these ESs is worth $300,000. Okay. And there's almost 1 million of those that have traded today. There, okay, is thick amounts of money moving in this marketplace. So when we start talking about order flow, don't get caught up in the minutia. When we start talking about order flow, what we're really talking about is big boy skin in the game movement. Okay. Big boy skin in the game. That's what I'm talking about with every dollar traded is skin in the game. Okay. Every single dollar. And the numbers out there are incomprehensibly large for how much money is actually flowing through the marketplace. What I'm going to show you is such an interesting concept because everybody kind of considers there's these whales trading in the marketplace. Okay. I'm going to have fun with that too. Are there big traders out there? Absolutely. Of course there are. Go into Microsoft for a second, and I'm going to open up this option statistics, right? Close that up. And I just want you to see in Microsoft right now, and I'm using Microsoft, just some marquee stock, whatever. There's 216,000 contracts have traded today. That's option contracts. Close that up for a second. We're going to look at something called time and sales. This is every single trade that's gone through today. Every single trade in options that's gone through today. You can see it all. Okay, you don't need to look at this. Forget this crap even existed. I'm going to show you something interesting. Okay, there's really only one very big trade in here the whole day. Okay, does anybody know why? Why is there only one really big trade in there all day? Okay, because the truth is that anybody these days in this business that's big trades like 1Z, 2Z, 3Z, they don't give a crap. They have algorithms. They don't need big size. You think that there's a whale at home. He's huge. He's huge. Okay. If you actually know what you're doing in the business, okay, you can trade one lots because you can say, oh, magic computer, fire one contract every 1/100th of a second. Boom, go. And all of a sudden you got 100 contracts filled in less than a second. It's cool, right? This is what I'm talking about with understanding a little bit about order flow. Okay. But I digress. Go back to it. Order flow has a lot to do with what we term market making matters. In the end, as I said to the beginning of this presentation, I want you to understand what really drives markets. I want you to understand that it's not, okay, this chair throwing person on CNBC that says something, or some guy gets on there that manages $6 billion. I have $6 billion under management. $6 billion is a freaking joke. We're moving trillions in a day. but the head of BlackRock is the biggest asset manager and doesn't even freaking, it's not even consequential. They're not big because in light of what you make, that's not what's moving markets. Those guys can be buying tens of billions of dollars of stock. They ain't gonna move crap. Let's get into market making. We having fun yet? Everybody okay? Okay. Are we having fun yet? Because this is where things are going to get crazy. They're going to get interesting. Okay. Market making matters. I want you to understand market making. Okay. Making a market is a two-sided market. Okay. Making a two-sided market. Market makers hedge. Okay. What does that even mean? Well, let's get to it. I'm going to spend a long time in trade today. So we're going to open up, okay, a market here, and I'm going to highlight it, and I'm even going to write it up on the screen. All right. And we're going to have a little bit of fun with this one. So here we go. Let's go. You know what? Let's switch from Microsoft. Let's go to Apple. Apple. Has everybody heard of that company before? Okay. So I'm going to get you guys in the next few moments to understand market making kind of 101, meaning that why do you sitting at home? You're like, I am a retail trader. I just want to trade on Robinhood and be left alone. Okay. But you still have to interact with market makers. Okay. And if you understand what market makers do, you'll understand, okay, how markets are actually going to move, especially when you trade. So I'm actually going to take a look at a market here. And let's just use these 235s because it's easier for me to talk about. This is a 235 call, and I'm going to write it up over here, right? So I think you guys will like this example. $235. This is a call option. There's 3 days left to live. Okay. The market on this, okay, is $1.40. Okay. At $1.42. I'm just kind of rounding in there. This, okay, is our bid, and this is our ask. Okay. Time out. That's a bid and an offer. Bid and ask, bid and offer. The terms are used interchangeably. Okay. When you make a market, a market maker is making this market right now. And you go, what do you mean a market maker? Okay. Behind the scenes over here, okay, there is a firm. That firm could be called Citadel. Everybody heard of Citadel? Ken Griffin owns the company Citadel. They moved from Chicago down to Miami. Okay. They're kicking it down there, trading and so forth. It's all done behind computers anyway. It's been done behind computers for the last almost 20 years. But Citadel makes markets. Citadel has dire competition. Okay. Company called Virtue, pretty damn big. Jane Street. You're like, how many people have heard of a company called Virtue? They're a public company. They're a market making firm. Most people know Citadel because Ken Griffin's pretty outspoken. He's also one of the wealthiest people in the world. Most people don't know Virtue. Okay. Very few people know the firm called Jane Street. Jane Street. Okay. Jane Street. Okay. So Virtue, Jane Street. Okay. These are all, and Citadel, these are all market makers, and they're in dire competition. And whoever makes the tightest market gets the order flow. Whoever makes the tightest market gets the order flow. So your market maker wants to make the tightest market possible. Why? When I say tight market, they want to be $1.40 at $1.41. $1.40 at $1.42 will work. Now, why is this important for you? Okay. I want you to understand the market making side of the business. First, you got to understand it. Then you're going to understand how understanding this is going to relate to actually moving markets. So we're $1.40 at $1.42, which means right this second, if I wanted to trade this option, could I buy it at $1.43? Yes. Okay. In this case, I'll use the market over here, not over here. Okay. Could I actually trade this at $1.42? Absolutely. Unequivocally. How many can I trade? I bet you could trade 1,000 at $1.42. Okay. And then 2 seconds later, okay, I could sell it for $1.40. Does that make sense? Anybody? Okay. Anybody? So you're $1.40, $1.42, $1.40, $1.42. That's the market. Okay. Why is the market maker making the market? Because the market maker gets to do what? They get to keep a very tiny penny in between. Okay. Sometimes it's not even a penny. Sometimes it's like a fraction of a penny. And sometimes, okay, some of these traders will even do what? Will even lose a little bit of money. So imagine if you are Citadel and what are you doing? Okay. Citadel has this giant vacuum, like, and Citadel, they're sucking up as much order flow as they possibly can. Because if you can make a half a penny and do it, okay, a few million times in a day, I'm going to tell you, you can buy probably anything you want, like Ken Griffin. That's basically the market making side of the business. The market making side of the business is no longer what people think. Like behind the market making side of the business, I know everybody's like, they have this magical mythical beast. It's a unicorn, and they stroke the unicorn, and it tells them which way the market's going to go. That could not be further from the truth. Okay. Because the market makers have to adhere, especially the big ones, to Dodd-Frank and the Volcker rule. And people go, what the hell are you talking about? Exactly. Okay. Because how many people knew I was, other than like it's in the slide, I was going to talk about Dodd-Frank. For those of you that have no idea what Dodd-Frank even is, it's a great thing because like I like to get on a presentation and be like, oh yeah, so Dodd-Frank and the Volcker rule, how do those move markets? I'm going to tell you exactly how they move markets. Okay. After the financial crisis. Okay. After the financial crisis, things changed. Okay. And the Dodd-Frank bill, okay, was written. And the reason they wrote the Dodd-Frank bill is because the banks were giving big bailouts. Everybody said, you're a naughty monkey. Bad JP Morgan. Now shut up and take a few $1 billion more. That's a whole different story. So inside of the Dodd-Frank bill, it defines, okay, who's too big to fail. And there's a regulation in the Dodd-Frank bill called the Volcker Rule, named for Paul Volcker. For those of you that have been around in the early 1980s, you would know that Paul Volcker was actually the head of the Federal Reserve, the FOMC, very outspoken head of the Federal Reserve. The Volcker Rule, what it basically says, if you're a market maker, you got to be a bona fide hedger. People have no idea what that term means. Okay, you got to be a bona fide hedger. What the hell does that mean? Market makers hedge. Okay. Market makers hedge. Why? Because they have to. Market makers hedge because they have to. And you go, well, can you explain that to me? Exactly where we're headed. Start to understand. First of all, if you're a market makers have to make both a bid and an offer. Let's say it again. Market makers have to make both a bid and an offer. That means they have to be both what? A buyer and a seller at the exact same time. Let me ask you something. Does the market maker care whether you're a buyer or seller? No, they do not. Unequivocally, this is a computer. And what the computer does is the computer sees the trade and just goes, oh, oh, go, 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 go. And like you got to understand that it can trade tens of millions of times in a minute. Okay. Literally, when you trade out there, okay, when you trade, everything is so sub-second, it's ridiculous. So here's the market right now. It's 133 and 132. If I wanted to buy them at 133, hit confirm and send, filled. Okay, if I wanted to sell 2 seconds later, filled. Okay, done. All right, that's how fast you can trade stuff. And by the way, the market moved on me. I still filled at $1.33 to buy and $1.32 to sell. Did I lose a penny? I did. But who facilitated me instantaneously? The market makers. Okay, and that's what's so freaking important. Now, let's get to it. Okay, here's the cool part. How do you impact the market? How can you move markets? Because again, in the end, I'm teaching you what the market maker is to take you to an uncomfortable place that you're not aware of. People constantly, okay, want to talk about, well, Trump's going to do this, which is going to do this to the marketplace. But if the CPI comes out here, we're going to do this. Okay. How about you have no idea what the hell is going to happen? And the only thing you can see is order flow. You can see trades coming through, and trades coming through can be incredibly predictive by nature. You buy a call. Let me explain you something. You're going to go out and buy a call. Okay. Let's use Apple for our example. Is that okay? Because I was using Apple a moment ago. So you're going to buy a 235 call. That's you. Okay. You buy a 235 call, and the 235 call. Okay. Let's get a real price on it. So 235 call is trading at, okay, $1.31. All right. I'm going to do one with only 3 days left. Doesn't matter. Okay. You're going to buy it and you're going to pay Well, in this case, I paid $1.33. You're going to pay $1.33. Okay. And you're going to do this times 10 contracts. Everybody good? So the trade will cost you basically $1,300. Okay. Time out. Is everybody comfortable with that? There's some people in here that have never traded an option before, and that's okay. Buying a 235 call. Buying a 235 call gives you the right to buy the stock at 235. Do you want to buy the stock at 235? I do not want to buy the stock at 235, but I have the right to buy the stock at 235. But I'm going to tell you right now, I don't even give a damn about the 235 call. What I really want you to understand is the market maker sells you the call. We okay? Because that's the part where like, huh? The hell is he talking about? Lay off the caffeine, man. Doesn't matter what the trade cost you. Yeah, it doesn't matter what the trade cost you. Okay. The market maker sells you the call. So let's go over here. Market maker. Market maker. MM. Okay. Sell 235 call. When they sell you the call, they collect $1.33. They're like, yay! We made $1.33 times 10 contract. Now, what does the market maker do after that? Well, I have it on here. The market maker hedges the call they sold. But there's a lot of people that believe, okay, the market maker sold me the call knowing that stock was going to go down. Oh, turns. The market maker, okay, before they've even, sold you the call, they've already hedged it. Okay, they've already hedged it. And when I say hedge, okay, when they sell you the 235 call, when you are doing this trade, it's the same trade. One person's on the buy side and one person's on the sell side, right? But it's the same thing. A 235 call is 235 call. So if I'm buying a 235 call, the market maker is selling me the 235 call. But when I buy a 235 call, where do I want the market to go? Okay, where do I want the market to go? Anybody? Okay, I want it to go up. I want to make sure everybody's comfortable with that. I want it to go up. When the market maker sells you the 235 call, where do they want the stock to go? When the market maker sells you the 235 call, where do they want the stock to go? Okay. It's a trick question. They don't give a damn. Trick question. They don't care. Okay. When they sell you the 235 call, they put on the market maker immediately does what? Okay. They buy stock. Okay. How much stock do they buy? We'll get to that in just a moment. They buy stock. Why do they buy stock? Because what they're doing is they're locking out the risk on here. They're going to zero out the risk. Some of you have actually heard the term like delta neutral. Okay. So let's go look at a 235 call just for a second. Let's consult the oracle. Okay. We're going to look at the 235 call and we'll actually look at something called delta. Okay. This trade has 32 deltas. Let's just make it 30 deltas. So if I do 10 contracts, watch this. Do 10 contracts, this equals, okay, negative 300. The triangle equals delta. Okay. How many shares do they buy? Positive 300 shares because that's delta. So if you're negative 300 and you're positive 300, what'd you do? Zero out the risk. Winner, winner, chicken dinner. They don't give a damn. What they basically do is lock in a penny immediately. Okay. And they go, they don't use 1,000 contracts. They hedge delta. They only hedge delta. Okay. They're like 10 contracts might equal 1,000 shares. Okay. But this thing only equals 300 right now. Okay. It only the equivalent of 300 shares. So they're going to hedge that. So you go, wait, what? Okay. So what the market maker is there to do is to immediately neutralize the position. Why? Okay. Why do they neutralize the position? You go, because they don't want to lose money. No, that's not the reason. The reason is because the damn regulation told them they had to. Okay. That's the real reason. This is the part that blows people's minds. Okay. Back in my day, right, in the late 90s, I got to the trading floor. Okay. I'd buy calls and be like, yeah, let's go. And then we would hedge. I worked for a smart market making firm. They would make us hedge everything. Okay. But there was traders down on the floor that you'd be like, they were buying and selling and just praying. They're like, go higher, please. Okay. And it was ridiculous. Today they hedge everything because they have to. The Volcker rule actually, okay, signifies they have to be what's termed a bona fide hedger. And a bona fide hedger basically means, okay, okay, the second that they take on risk, they got to offload the risk. They offload the risk. Okay. And this is actually just capturing like a penny. So why do you need to know this? Okay. Because I'm going to show you why this is so important for you. And that's what this is about. I'm trying to give you like, again, a look down a hole that you've never seen before. Like retail is just not exposed to this. And in today's marketplace, now more than ever, this is what moves markets. Okay. This is what moves markets. And we're going to come back to this in a moment. We're going to totally blank the screen. We're going to come back to it. Okay. Market making hedges move markets. You've heard of the term squeeze before. Everybody's heard of the term squeeze. Squeezing money. Okay. It's the hedge that moves market, the gamma squeeze. Okay. How does it actually work? Well, here's the interesting portion of it. Okay. So we're going to rewrite this up. We're going to do it with a completely different example because again, I am a big believer, okay, that learning something like this, repetition, 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 right? You do this a couple times, you'll freaking understand one way or the other. So you look at this chart this morning, oh, straight up out of the gate, okay, straight up out of the gate. You know, when you look at something like Apple, they're like, woo, look at Google this morning. Okay. Oh, Google's like flying high. I'm just using a couple of tech stocks. Or we could look at Meta. Okay. Meta, look at this thing straight up throughout the course today. All right. And well, I'm going to show you exactly what's really going on. You guys want to use Meta? Okay. Yeah, sure. I'll use Meta. Perfect. Okay. I'll use Meta in this next example. You're going to go out and you're going to buy a call. Okay. In Meta. We're actually going to make it these 710s. Okay. Can you believe Meta's at $710? Okay. When I get sick over there, we're actually going to use Meta in the example though. So you think Meta is going higher. You at home think Meta is going to higher. Okay. You're going to buy, okay, buy a 710 call. And that 710 call, okay, we're going to use real prices in here. That 710 call, okay, is trading right now for 845. Look at the market, 825, 845, right? Perfect. Okay. So this thing is trading, okay, for what? You're going to buy the 710 call and you're actually going to buy it for $8.45. Okay. And let's say, you know, you're trading pretty good. You did a whole, one contract. Okay. You did one contract worth, but that's still going to be, you know, some decent risk out there, right? Like $845 risk. Okay. The market maker. So the market maker is going to go out and they're going to sell you, okay, the 710 call. And they're going to sell that 710 call for $8.45. They sold you basically the one contract. Okay. They're collecting $845 and their risk is basically like unlimited at that point, right? So they have huge risk. They immediately turn around and do what? Buy stock. What stock do they buy? Of course, Meta. Okay. The market making firm actually buys the stock. Okay. How much do they buy? In this case, I glanced at a moment ago. This thing, I'll just round it, was very close to 50 delta. Okay. So what happened is you bought 50 delta, they sold 50 delta. They'll trade 50 shares, okay, of stock. So they will buy 50 shares, buy stock. They buy 50 shares. You go, 50 shares isn't doing anything. Great. Okay. A few minutes later, somebody else comes in. What do? Okay. They buy the 700 call. They buy the 700 call, and this person does 10 contracts. And when they do 10 contracts, that exudes basically, they're buying the 700 call, okay, almost 600 deltas. Before you know it, the market making firm is short another 600 delta. Okay. What do they have to do? They have to buy, okay, 600 shares of stock. But here's the irony. When they buy 600 shares of stock, let me ask you a question. When you buy stock, where does stock go? Hmm? When you buy stock, where does stock go? Anybody? Okay, goes up. But here's the irony. When you bought this second trade, you bought 600 shares, it caused the stock to go up, but it also unseated the very first position we were in because this delta changed. It's liquid, it's fluid. So what they had to do is not just buy 600 shares, they had to buy 600 shares to hedge the second position, but then they probably had to buy, okay, another 20 shares to hedge the original position. So what it's actually doing is causing a cyclical feedback loop. Okay. You bought calls, you forced the market maker to buy stock. The market maker buys stock, which actually forced other people to come in and buy calls. And when they bought calls, it caused the market maker to have to buy more stock for the original hedge and all the other hedges. And all of a sudden, the stock starts to spiral up and out of control. And it looks like incredibly linear. And you're like, how the hell does that happen? It's because what you call a gamma squeeze. It's squeeze. Okay. You want to see it in real time. Okay. Sticks out like a sore thumb. Okay. Meta this morning, it's a damn good example. It's a good example. Okay. Even better example, though, like it's clear as day. Like, by the way, I was watching Microsoft earlier today. It actually came off. It's clear as day. This thing actually was squeezing. Apple today, phenomenal example. You're like, oh, yeah, but you can see it in the chart. I'm not looking at the chart. Okay. Take a look at like option statistics in here. Start looking at option statistics. You can see people actually literally buying calls. More people are buying calls than selling. Okay. Gives you a really, really interesting look at order flow. If you look at like Amazon, Amazon is squeezing higher. Okay. Why is it squeezing higher? Look at the number of calls traded at the ask or above. We're looking right now, okay, at the order flow, and the order flow is justifying the move that you're actually seeing on the screen. Okay. A glance at this throughout the course of the day immediately can give you insight, though, okay, to directional bias. So somebody was actually mentioned, like Palantir, which it had earnings. Okay. And to be fair, though, this had earnings. So you can look at this all you want, and the order flow, yeah, it's definitely got some more call buying on it, but it's earnings driven, okay, which is a jump immediately overnight. And I agree with you, okay, 100%. That's the kind of crap, though. This is the area that people don't understand about this marketplace, okay? Imagine when you start looking at it in products like the spiders, the entire S&P 500, okay? Right now, it's pretty even. It's actually fairly even inside of the spiders, but this gives you an insight, okay, to markets that people simply have not had, okay? You can actually gauge what's going on in the market, not just in the here and now, where we're headed. Why? Because you understand it's the hedge that moves the market. You're buying calls, then all of a sudden other traders rush in to buy calls, and you start to see these stocks go absolutely parabolic. And then you hear these people on CNBC, and on CNBC, they're screaming, okay, like how Meta is going to be the greatest company ever, and that Meta can only go straight up. Okay. You want to know the reality? Day in and day out in Meta, this has nothing to do with anybody buying stock. It has everything to do with intraday. People are buying call options. And as they buy call options, they're forcing the stock higher. And they're forcing the stock higher. Why are they forcing the stock higher? The more calls that you buy, okay? The more calls that you buy. So you're at home, okay, and you're buying calls. Let me actually brighten this up so you guys can see it a little bit more. You're at home, okay? You are buying calls. You're buying calls. Okay. How are you forcing it up? Because the market maker is selling calls and, okay, buying stock. Okay. They're buying the stock. You're buying calls, forcing other people to buy calls. They're turning around, selling the call, buying stock. The more they actually buy the stock, the more the stock perpetuates higher. You want to know something really crazy? Okay. There's this myth out there that you actually even have to hold the stock. Okay. What if market makers could sell the stock? Excuse me. What if market makers could sell the stock and not cause the stock to go down? How do they do that? Huh? Think about this for a second. You got a feedback loop in here. Okay. I'm going to blow everybody's mind right now. They could buy 10 million shares of stock this week. One market making firm can buy 10 million shares of stock. Okay. This week, sell every single share of that stock and never cause the market to move down. How do they do it? How do they do it? Okay. I'm going to tell you exactly how they do it. They've been selling you calls all freaking week, and their calls go what we term in the money. The stock gets called away on Saturday. Bye-bye. Gone. Okay. There's no lending, no nothing. They're selling you calls. When you buy a call, you have the right to buy stock. When you sell a call, someone has the right to take stock from you. Okay. So I sell, okay, I don't know, a million calls that week, and I have millions and millions of shares of what? Stock. But at the end of the week, if the calls are in the money, stock just gets called away. Nobody even has to sell. Okay. This is the way we can get a stock to go up and never hold one share of stock over the weekend. Again, I wanted to show you something that will absolutely blow your freaking mind. An automatic assignment at the end of the week, it calls their stock away. And they're like, yeah, man, we got a million shares of stock called away, a big smile on their face. Okay. We made a couple $1 million this week. We drove Meta to new highs, and they never even held one share of stock. And everything you hear on CNBC is they're like, BlackRock and is holding huge amounts of stock. You couldn't be more full of it. Everything you're seeing on the screen right now is driving of order flow. People, okay, what you got to learn is this is the hedge that moves markets. This is the hedge that moves markets. Okay. This is how you turn, okay, it into money. This is actually a butterfly that I actually hit. For $28 invested, I got back 110. It's a 293% return. Okay. Here's another one. Amazon. Okay. These trades were done a few months ago. $48 invested. I got back 215, a 345% return. Now, okay. Those are the kind of trades you're going to be able to build in and around understanding. Okay. And reading and understanding order flow can provide incredible, incredible insights to the marketplace. One more time. Okay, we're going to go live to that marketplace one more time because I really want to drive this home. Because when people see it, okay, again and again, it doesn't resonate like the first couple times. They're like, holy crap, what just happened there? Okay, here's a stock that's actually going down, right? The market maker doesn't care. Just the same as you saw stocks running to the upside, this thing is actually in NVIDIA, it's caught in a negative feedback loop. Okay. Today it's bouncing a little bit, but it's predominantly caught in a negative feedback loop where the stock can start to spiral out of control to the downside. Okay. But I wanted to show you something that people have never really seen before. They don't see the fact that right now, okay, there's so much smoke, okay, and mirrors in this marketplace. And the market making side of the business is behind it. They're not out there though, like, people think like it's something glorious to be a market maker. Okay. It's not something like, it's not like a CD business. All they're basically doing is reacting to what you're doing. Okay. They're on the reactionary side. You're buying, they're selling. But as soon as they sell, they sweep in and they have to buy stock. Why do they have to buy stock? Well, every time they buy stock, it drives the stock higher. When they do buy stock, they're buying stock because you forced them to, because you bought calls. And the more calls you buy, the more the stock actually goes up. And then the stock gets called away at the end of the week. They don't even have to hold the stock. Okay. And it blows people's minds that you can actually drive stock dramatically higher and never hold a single share. Okay. That's the scary part because when the rug does get pulled out, you're like, oh, okay. This is the emperor has no clothes. That's what the entire market, it's always been about that. This is what markets have been. Okay. The emperor wears no clothes basically is you're driving markets higher. Somebody is going to be left holding the bag of risk out there. You know what the irony of that is? I'll tell you who holds a lot of the bag of risk. Who does the stock buybacks out there? You guys are buying back tons of their stock. You're like, oh my gosh, it's an interesting point, right? Okay. You're actually driving Amazon to new highs today, predicated on what? Okay. You're predicated on the fact that what? People are buying calls. So look at Amazon for a second. As I said, look at Amazon. It's clear as day. Look how many calls are being bought in here. Okay. This little order flow over here, this takes a little time to understand, but traded at the ask or above, there's 61,000 being bought, only 40,000 being sold. What that effectively means that this is the ask or above. This is people literally pressure, buy, 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 buy. Okay. They're on the buy side. This is you. This is at home. Okay. And this is the thing that's actually driving stocks like Amazon, okay, to be up almost another 2% today in a marketplace that's just trickling to the upside. But Amazon's on the leading edge. Why is Amazon on the leading edge? Because people are doing they're in a call buying frenzy, which is actually driving the stock higher. People, this is the stuff that drives markets. Now hang with me right until the end, okay, because we're going to give you the auto expected move indicator. Now, how do I turn the order flow that I'm displaying to you today? Because that's what this is. How do you turn the understanding of market making and order flow into money? Couple of strategies I go through. Strategy number one, this is an in-out spread. By the way, I wanted to show you recent trades. Okay, recent. If it ain't in the last couple of months, I'm not going to show it here. This is the XLE. This is the energy sector. Okay, what do we have here? This is a bullish spread. Okay, every $91 invested, I got back 150. It's a 65% return. Okay, which is good for an in-out spread. In-out spread is a very low risk. Okay, decent return on there as well. Okay, but very, very minimal risk. By the way, this doesn't have to be $91. This could be $910 to get back, for instance, $1,500. Okay, I'm showing you the lowest common denominator. This is right to the beginning of the year. The next trade over here is GLD. In GLD, okay, this is every $145 I invested, I got back 231. This is a 59% return. Okay, and you're looking at this. Look, how do you think I actually did this trade? Right, so I cruise over to like GLD. Let's do it. Okay, look over at GLD. Okay, GLD, the middle of a squeeze, people. I just hopped on board. By the way, I have no qualms in saying, okay, I hopped on board and I want to show you the exact date, okay, of this trade. All right, got in January 3rd. Okay, got out on the 16th. You're like, man, you could have made a lot more money. Okay, I didn't need to be greedy. I just need to be in. I need to be out. I made 59%. That doesn't suck. Did gold go up 59%? Hell no. Gold went up a few percent. I turned it into 59%. How? Okay. Look at the dates, January 3rd. Go look at the chart. Okay. Do I know anything about charts? I do not, sir. Okay. But I can tell you right now, coming in here on January 3rd, okay, we had the beginnings of the squeeze right in the beginning of the year. So just hopped on board. It's gone parabolic. I mean, this thing is just higher and higher and higher every single day inside of gold. I didn't sit there and comment about tariffs. Okay. What's the administration going to do? No one has any idea what the administration's going to do. Okay. Much less them. They don't know what they're going to do either. Okay. That's the fun part. So this is the GLD. This is the XLI. Anybody know what this is? Industrials. Every $83 invested, I got back 127. Okay. By the way, this is a cool trade. I just did it. Okay. Well, like a week ago. This is on January 24th, out on the 27th. Okay. This is actually one where I did to the downside. By the way, I personally love my bearish trades. I find them easier to take the bearish trades. Take it sell side. $83 to get back 127. It's 53% return. You want to go look at the chart on XLI? Like, what did you see in there? It was tariffs. It was this. It was none of the above. Okay. Order flow. Okay. It's simply order flow. This thing was spurting to the upside, ran out of steam. Okay. And absolutely freaking imploded. Okay. This one imploded. This is a combination of understanding expected move, okay, and how market makers, okay, parse order flow. It's a combination of the two. The next one over here, XLV. XLV. This is healthcare. Okay. In healthcare. Put this on January 27th, closed it on the 29th. All right. I'm only in it for 2 days, but over $84 I invested, I got back 112. It's 33% return. I've got a rule. If I can make 30% plus in the first 3 days, pull the ripcord and out of the contest. Okay. That's just strategy number one. That's in-out spreads. Strategy number two, spread. Okay. This is the last back spread that I did. And I'm going to tell you, be honest with you, this one didn't work. Okay. And I still received 75 dollar credit. Okay. So $94 initial credit, bought the trade back for $19 debit to close. I still got a $75 credit. I don't mind saying on this one, I was wrong. Okay. This one, then strategy number two, this is one of the most powerful strategies to use. Okay. For wild squeeze situation. Okay. Wild situation over here. Now, strategy number three, this is the mighty Christmas tree. Look, I trade Christmas trees often, but the only trades that I am showing you here today are trades, okay, not that I just placed in my account. These are trades, by the way, this one's obviously in Tasty. These are trades that I actually shot out to thousands and thousands of people. All the aforementioned trades, okay, those trades, here, let's go to my monitor tab. Let's go to the monitor tab over to account statement. Here's the XLI right here. Okay, the XLI. You can see every trade that I did. You want to know where they come from? Right here. Okay, this is my trade history. So you can see everything in here. By the way, we are a completely open book here at TheoTrade. Take a look at the order flow. Take a look at every trade that I did. That's Walmart. This is actually the Christmas tree. It's an extraordinarily powerful trade. This is $1,128 initial credit with a $489 debit to close. It's a $640 credit, okay, on a very, very minimal size trade, okay. Onward over here. This, okay, is the golden child right now. The golden child is the expected move butterflies, okay. This is the trade that was opened on the 14th and closed on the 16th, okay. That's just in January. $60 invested, I got back 175. $60 invested, I got back a 175. It's 192% return. Next, okay, this one's actually back in what? December. Okay, trades on what? On the 17th, off on the 20th. $60 invested, I got back 205, 242% return. Okay, another one. This one was actually put on January 6th, taken off January 10th. $45 invested, I got back 295. Okay, now you could definitely do $450 invested, get back 2,950, 555% return. Okay, another one. Okay, this one is literally closed in one day. This was actually opened on the 13th, closed on the 13th. This one is pure, okay, order flow. This is pure order flow, where I looked at it and I said, this thing could actually reverse right now. Look at the order flow in here. $55 invested, I got back 500. Okay, $55 invested, I got back 500. It's an 809% return. Here's yet another one. Okay, this one, again, all order flow, all done in one day. That recent enough for you? Okay, January 24th. In January 24th, out January 24th. $35 invested, I got back 235 to 571% return. Okay, every trader needs an order flow edge. Traders without any type of forward-looking edge, they're just flying blind. Okay, that's why I've given you an excerpt of my Mega Mastermind today. The Mega Mastermind is coming up, starts this Thursday, $2,000. Okay, it's 12-week strategy focused mastermind. I am leading every single one of these. Okay, each one of the sessions is very interactive, 90 minutes. When I say I give you an excerpt of it today, okay, I just gave you a smattering in basically 40 minutes of what it is, okay, to understand a little bit about the market making side of the business. Okay, imagine you spend 12 weeks, 90 minutes, okay, per week. And I'm actually going to give you some prerequisites to go through on that. 90 minutes, okay, 12 weeks in a row, all the Q&A you want, all the email you want in there, okay? How much you're going to pick up from this? The slightest nuance in this business can be the difference between tens of thousands of dollars. The mastermind's $2,000. It's $2,000. Again, we have a 12-week mastermind. It kicks off this Thursday. Now it's 8 a.m. Pacific time. Okay, there's plenty of time for you to get ready for it. By the way, I love like the reversals question. Okay, that's my thing. Pete was just hitting on it. By the way, I'm going to answer all the questions in here. Pete was hitting on it. He's like about reversals. Okay, I'm all about reversals. Love that crap. Absolutely love it. Let me take you through a little bit about the mastermind, and then I'm going to answer every one of the questions that are coming in here. So the mastermind kicks off February 6th. Okay, that's this Thursday, obviously. You're given during this mastermind, okay, unlimited priority email access. It's direct to me. Okay, so you have this 12-week mastermind. Okay, they're 90-minute sessions. So each one of these sessions is 90 minutes. It kicks off obviously this Thursday, which is plenty of time to get ready. I know it's Tuesday. Okay, and I know, by the way, I'm going to kick this one off. I'm not going to just jump in and be like, "Hi, welcome to the mastermind." Okay, this is the mastermind about how the sausage is made. Okay, we're going to go. These masterminds are recorded. Okay, you can watch it time and again. You have access to all the class archives from this mastermind, okay, indefinitely, which is priceless. Again, any questions that come up during the course of the mastermind, you can email me directly. Okay, I spend hours a day answering emails. It's what we do here at TheoTrade. We are also going to learn it, trade it, which basically means when we talk about in-out spreads, screw it. We're trading in and out spread. We talk about this catapult. We're going to trade it. We're going to trade Christmas trees. We're going to trade weekly butterflies. We're going to trade some earnings slips. We're going to trade some back spreads. But the whole idea of this mastermind, okay, is not to take you where some of my classes have taken you before, is to take you, okay, to an entirely different level, okay, to add layers on top of your trading and aspects of your trading, okay, that you never thought of before. That's the goal of this. Okay. And people come here and they're like, "Oh, I kind of understood. I already understand about in-out spread. What's going to be different here?" Okay. This is not about an in-out spread. This is about how do you make that in-out spread, okay, and take it to an entirely different level. How do you actually look at like order flow and justify, holy crap, I see it. I see exactly what he's talking about right now, taking a bearish position in the middle of the most wild bullish move you've ever seen. Okay. That's the kind of stuff we're going to get into. It's nuances. And I always tell people there are people that like to just be fed sausage. And then there's people that want to see how the sausage is made. And this is how the sausage is going to be made over 12 weeks. Okay. It's going to be the most in depth. Uh, when I talk about this, it's strategy focused. Okay. There's going to be a little bit of theory, but this is basically hands-on approach. And when I say live trading alerts, you're going to learn it, you're going to trade it, you're going to learn it, you're going to trade it. I'm going to give you alerts on the opening position and the close of the position. You can go to theotrade.com/mega, okay, to enroll for it. As you actually scroll down, I want to make sure everybody sees this page. As you scroll down on the page over here, okay, very important, okay, towards the bottom of the page here, and that is, okay, make sure you put a valid phone number and a valid email address. Don't do like the hidden email address kind of thing. Want to make sure you actually get proper email address in there because we are going to text and email those trades out. Text, email, and push notification those trades out. Okay. You're going to absolutely love what we're doing though in this 12-week mastermind here. By the way, again, it's theotrade.com/mega, theotrade.com/mega. Now, this, okay, is a new curriculum, entirely new curriculum, specifically for 2025. I have never done the 12-week mastermind like this before. Yes, we're going to cover in-out spreads and catapult and Christmas tree and back spreads, okay, SPX, butterflies, and earnings, okay, but we're going to do much deeper. As I said, it's not about what a Christmas tree spread is, okay, but what makes a valid Christmas tree spread. Why is this a better time to trade the Christmas tree spread than ever before? Question people always get, how the hell do you hit so many SPX butterflies? Exactly what we're going to get to. Okay. Catapult trades. If you understand what a catapult is, I'm going to take you to an entirely different level inside of catapult trading. Okay. Stuff that I can't send these trades out at TheoTrade. Okay. Because people don't understand in context. This group for 12 weeks is going to get to see, kind of the curtain pulled back. I think you guys are really going to enjoy it. Now, with this, there's a 90-day money back guarantee. Okay. Also very important. You're enrolling for it now. You've got 12 weeks. There's a 90-day money back guarantee on it. Okay. For the most part, I don't even like doing this, but we're doing it anyway. Okay. Because at any point, okay, during the course pretty much of that 90 days, no stipulations, money back guarantee. Look, I want you to come to this. Okay? I want you to be comfortable in this. And I know sometimes life gets in the way, but there's no excuses, no questions, no commentary needed. Just email us and ask for your money back if you're not, completely, okay, satisfied with it. And that's important. And again, we want people that want to be here, right? I want people to obviously come to this that want to learn, okay, the depth of knowledge that goes into trade. Okay. Very few people understand like the market making side of the business. There's actually going to be a full session, just like I talked about today. It's going to be a full 90 minutes on that, but it's going to be far more, okay, broken down and nuanced of why markets are going to move the way they're going to move based on the market making background of this, based on retail clients. Okay. So again, there's a full 90-day money back guarantee on this, which we are out of our minds on there because you're getting most of that 12 weeks, okay, packed in there. Nevertheless, here we are. There's a full 90-day money back guarantee. So no rhyme, no reason, no risk to you. And that is critically important in here. Now, okay, as I kind of indicated a moment ago, this is not for everyone. There's a lot of classes we do here at TheoTrade. I said, look, this is for everyone. Okay, I'm going to send you this. I'm going to spoon feed you. We are going to spoon feed you some trades during this. Okay, this is one, though, strap in. Not everyone wants to invest the time to build skills for life. Not everyone wants to take the time to understand how the market making side of the business. They just literally want to be like, just give me the next trade. Give me the next trade. Okay, there is a certain element, though, that we definitely attract here at TheoTrade that's like, give it to me all because you might actually see something, all right, and have known for ever that you've been in this business, you're like, holy crap, that never even occurred to me. People are buying stock right now, tens of millions of shares of stock, never having to sell it. And the stock just sells it and goes, bye bye. You have stocks that are soaring higher. You go, who owns all the stock? Who is the dummy that's buying stock in Meta at $710? Well, I'll tell you what, you're buying a call, forcing the market maker to buy the stock. The stock basically gets called away at the end of the week. Okay. In the end, nobody is. Smoke and mirrors, people. That's the kind of crap you're going to learn here. It's 12-week commitment. If you haven't noticed, when it comes to the 12 weeks over here, I'm going to bring my A game. All right. Like I did today, every one of these sessions, you better come in here. Like Thursdays for me is like game time. Right. I ask you to do the same. Okay. And I literally do. I ask you to do the same. Bring your A game every single time that you come in there or listen to the archive. I'm also going to tell you this. Every time you come in there, okay, you're not expected to understand everything that goes on, okay, in the 90 minutes. That's why we have the archives. That's okay. You come here to learn. If you understood everything, wouldn't be worthwhile. And that's why I say, though, it's not for everyone. And I spend a minute on this one because I'll let you know, okay? Everyone's going to get challenged. Everyone. I'll make sure that you understand it. That's why there's also unlimited email, okay? Grand Slam home run. This is the SPX expected move butterfly. Again, this is the one every $55 invested. I got back 500 and 809% return. Now, to go down the list again, okay? It's a 12-week strategy focused mastermind. It's $2,000. Each one of these 12, like during the 12-week sessions, each one of them is approximately 90 minutes. What we usually do is we open up a little bit of Q&A, okay, get everybody warmed up for 10 to 15 minutes, answer some questions usually from the previous week, some general questions. Boom, we do about an hour of education, answer a couple of questions, boom, do it again. Okay, that's usually what the itinerary is like. All right, February 6th, what do you got? That kicks off this Thursday. This is it, people. This is your time to get into it. Unlimited priority email access. That's direct to me. It's $1,000 value. Okay, you access to all the class archives that you're going to need. So not only are we giving you access to all of the mastermind archives, but we're also giving you anything that I consider kind of a prerequisite to going in here. We're going to give you access to those classes too. Okay. Obviously live trading alerts, learn it, trade it. It's $1,000. And yes, okay, we are going to trade during this. I have to trade a lot. Okay. And I know people are very worried about how much capital you have to have in there. Okay. Generally speaking, it's not going to make a huge difference. There's a few trades. There are a few trades that I do that are capital intensive. A few trades. You talk about in-out spreads, $2,000 account. Earnings flips, $2,000 account. Back spreads, $2,000 account. Butterflies, $2,000 account. Catapults, all right, you got to have at least 10 grand, probably do catapults. Christmas tree is the big one. Christmas tree, probably have to about $20,000, $25,000 in the account. Okay. Now I'm going to show you some trades that if you had $100,000 in the account, let's go crazy. Okay. But the truth is you don't have to have a wild size account. I mean, one of the things that I have to do is take complex trades and ideas, okay, and distill it down. That's my job. I got to distill it down so that everybody can trade it. It's not good, if like people are so worried about it. All right, I'm telling you, you can do this with an extraordinarily small account. Yes, the mastermind costs $2,000. You go, why would I want to spend $2,000 if I only had a $2,000 account? Because you're going to learn, okay? Because you're going to learn. And you're going to learn it and you're going to trade it. And I don't care if you only have a $2,000 account, at least got the skill set behind you. Because when you do have more money and you do want to put it to work, then you're going to know what the hell you're doing. And that's important. Okay. Now, again, 90-day money back guarantee. There are 50 spots and we do incentivize you to enroll today. Obviously, look, there's two things that are going to incentivize you to enroll today. Number one, this crap starts on Thursday. Okay. And I want everybody to hit the ground running, right? Additionally, there's only 50 spots in the 90-day money back guarantee. And we do that specifically to incentivize you to enroll today. Okay. The big bonus here, we give you unlimited email mentoring. And I feel pretty strongly about that. Okay. You hit us with an email, we'll hit you back. Right. Within 24 hours, we will get back to you. The whole thing is $2,000. Now, our gift to you, you can download our expected move indicator. Where, pray tell, do you find this? To actually scroll down this page, okay, right here, click to download your expected move indicator. You will find it right in there. Okay. All right. Now we are here, okay, to help. If you ever need us, okay, you're in this mastermind, you need us, email us, support@theotrade.com. Okay. The second that you actually enroll here, we will know that you're part of our mastermind. Second you enroll today, you are tagged. We will know you're part of our mastermind. You're actually put in a preferential treatment in terms of email sequence, meaning that you're actually going to jump to the front of the line of our email. Okay. Also, for enrolling today, if you need us, call us 623-244-5657. Again, 623-244-5657. And again, do not hesitate. Okay. Do not hesitate to give them a call. If you've got more questions, okay, pertaining to this mastermind, okay, anything TheoTrade related, by all means, if you need us, okay, please do call us. There's some people that are just not comfortable necessarily, putting a credit card in online, which is fine. Like, I get it. All right. Okay. Next in the dot, theotrade.com/mega. Look, fast track versus the slow lane. Everybody here's got a choice to make. Okay. Whether you're either going to be forward looking, okay, on the fast track, or stay in the slow lane with backward looking indicators. That's a big portion, okay, of what we're really trying to drive home today. Today, I wanted to bring something to you, okay, that you hadn't seen before. Today, I wanted to bring something to you that can literally change the entire way you view markets. People look at this initially and they think to themselves, it's a $2,000 class, $2,000 class. We just taught you something today, okay, for free that can be worth tens of thousands of dollars in your trading career. Give us, okay, 12 weeks. Give me 12 weeks and 90 minutes per week of your time and watch, okay, how your P&L grows. And that's the idea of going through and giving you kind of an excerpt today of this mastermind. And that's exactly what I did today, is give you a full-blown kind of excerpt of that mastermind over there. And that's so important to me that you understand, okay, it's not going to be based on backward-looking indicators. We're very, very forward-looking, everything from expected move to understanding order flow. Now, a little bit of Q&A in here, okay, and we'll kind of wrap things up over here. So with that, one of the general questions that people kind of ask in here, right? By the way, somebody said you have auto expected move for other trading platforms. Yeah, we can actually convert the code. Okay, we can convert code. The truth is the expected move is on almost every trading platform now. It's just not on the charts. Okay, the expected move is often found right here in the trade tab. So, but I have the charting version of it, which is critically important. Okay. All right. So, gonna answer some questions. People always ask us what we need to get started. Okay. Laptop internet connection. Quite frankly, you really only need, phone, an iPad, something along those lines. Okay. You don't need a laptop. Literally any mobile device. Everything that we do now here at TheoTrade, okay, can be streamed over any mobile device. So if you're comfortable on a mobile device, it is what it is. That's fine with us. Okay. Any mobile device, laptop. Okay. You don't have to go out there and buy like the most expensive like iPad imaginable. Fine. What you're buying today for $2,000, this is access to a 12-week mastermind. Okay. The sessions run approximately 90 minutes. Again, the sessions run 90 minutes. Everything, okay, is recorded. So every spoken word here at TheoTrade is recorded. Now, access to all aforementioned classes are going to be provided. So we're going to give you access to in-out spreads and back spreads and catapults, etc. That's already on the page. It is waiting. Okay, it's waiting for you. Okay, email us anytime. Okay, email us anytime over here. Bear with me here. Email us anytime, receive a response within 24 hours, including trade-related questions. Support@theotrade.com. Okay, when I say email us anytime, the one, catch over there is this. Like, don't email us on a Friday afternoon with 5 minutes to go to the cash close. Okay, I get it. Okay, it's fine. But we trade and trade heavily. So I answer emails. I live in two different places. I live here in Arizona. I live also in the U.S. Virgin Islands. I'm on the island. I answer emails before the market opens when I'm here in Arizona because we're much earlier time frame here. I answer emails after the market closes. So while the markets are open, usually on them, trading them. Okay. All right. Variations of the trade are available inside of an IRA or retirement account. So for those of you, if you're kind of curious about retirement accounts and so forth, absolutely, there's no problem with that whatsoever. You can have a retirement account with as little as 2 grand in it and trade this stuff. Now, if you're curious about option approval, I always get that question too. Okay, is if you got problems with option approval over here, we'll get you option approval. So I never want the brokerage firm, okay, to limit your ability to trade and trade more actively. So we'll help you with the brokerage firm out there. Canadians, we can take care of you there too. Okay, remember there are 50 riskless spots available. Get results, take action, enroll for TheoTrade now. There's no risk to you. Again, I reiterate, if you guys need somebody to talk to, by all means, hit us up. The phone number is right on this page. Okay, so obviously, you guys can scroll through here, fill this out if you have questions. We're going to be here for the next few minutes answering those questions for you. Again, theotrade.com/mega. Hope you guys actually enjoyed the presentation today. I'll obviously be back at it here this Thursday. Thanks everybody for tuning in, here to answer some questions for a few minutes. Have a wonderful afternoon. Bye-bye.